Okay, so today I'd like to welcome to Ignite Paul Kennedy. Paul is the president and CEO of DSG, Dakota Supply Group, and welcome, Paul.
Thanks, David. Great to be with you. Thanks for the invite.
Yeah, nice to catch up with you. And I think DSG has really been doing some important things in the marketplace, and I'd like to explore with you a little bit today what your perspective is, what's your point of view on the marketplace and how it's changing, and then talk through how DSG is availing itself of these opportunities and overcoming challenges in the marketplace. So maybe we'll just start out, Paul. Tell us a little bit about what you see in the marketplace today that's creating opportunities for DSG and perhaps challenges that the industry needs to address.
Sure. So, as I kind of think about some of the changes in the industry and in the markets that we serve in, the electrical, plumbing, HVAC, and waterworks space, and each of them offer up their own opportunities individually. But I think collectively, the move to more technical products that we're selling, which then requires us to provide a different level of support to our customers to find the right solutions and drive that drive their business, help drive their business forward. So I think a shift to services to a degree and continuing to add value to what we do. And then I think another key trend that we're seeing is the digitization of business. And that means a lot of different things to a lot of different people. But I think my view of it and our view of it is meeting our customers where they are, wherever that is, and providing a frictionless experience, be that online, offline, or a combination of both. So, really thinking deeply about how do we address that, both with technology, but also with mindset, of our employee owners.
Interesting. So in terms of services, you alluded to some of the challenges that go with selling services. Part of it is obviously having a sales team that knows how to communicate the value of services, knows how to really configure services in a way that they align with what real customers want. But another part of it is really being able to get paid for the value of services. Can you talk a little bit about that value messaging and how you get paid for service value?
Yeah, you're absolutely right. And the key there is to your point around having sales people that understand the value and can articulate that value, because it's hard to charge for it if you're not attaching value and being really keen on articulating value and where the customer is going to realize an offsetting savings, right? And how that is going to enhance their productivity, their efficiency, either on the job or providing solutions for their end customers. So I think it is critical that we deeply think about what is the value that those services are providing, and then how do we articulate it? And it's difficult, right? Some customers really have a good understanding of their business and what drives their costs in their business from a labor and a product perspective. And, many of the services that we're providing are enhancing, driving productivity and efficiency on their labor side, whether it's, kitting, fabricating, whatever the case may be, where we're taking, low value activities from their perspective and kind of moving that into product cost and services.
And of course, there's a big trend to get activities out of the field and into more centralized, whether it's prefab or other trends like that, so that you can realize economies of scale and specialization, a lot of that as well.
Absolutely. And then logistics, I think, is the other piece in helping with project management and getting things on the job site when the customer needs them and being able to present that material in a way that makes it easier for them to use, whether it's unpackaging, on a lighting job or, delivering pipe on a long waterworks run, dropping pipe, along the route as you go. So, and again, the real key is, how do you attach enough value to that and help the customer understand the value of that so you can charge for it?
And I think for a lot of distributors, that's a pretty difficult transition because they're so used to selling piece parts at, per unit cost. And then they come to the customer and say, okay, we're going to have to, have a different way of charging you for these things. Can you talk a little bit about that, crossing the chasm, if you will, of charging just for service?
Yeah, I think it's a journey and one that we have not yet perfected, but we're on that journey today. And again, when you have do a good job of being able to articulate the value and really bring it to the customers so they understand the value and can realize the value that they're going to realize. Sometimes it takes a couple of times for them to actually realize that value, that resonates with them for you to be able to continue to charge for it. And then when you embed yourself deeply with your customers and in providing these services, they just start expecting it and quoting it in there's an expectation that as they're quoting a project that they're going to utilize your services because you have articulated the value, you've proven the value, and they've realized the value.
I think sometimes it comes down to the ability of the salesperson to present different options and being willing to bundle or even unbundle those services. So if people aren't seeing the value, we're going to offer you just the usual piece part pricing. On the other hand, once you start to realize that, the total cost is not just what you pay for parts, but all of the other activities that, drive expenses in the contractor or whoever else you're working with, they have to realize that in order to attach value. And they also have to be presented with options that pull back that value if they're not willing to pay for it.
Right. And helping them understand their processes. Sometimes they don't have a clear view of everything they're doing and all of the touches that are involved in dealing with a particular product. So, helping bring clarity to that for them is important in the process as well.
Yeah, it's actually fascinating. I was involved in a NECA project around workflow, and there's a huge amount of work that's going on now just to define the stages of workflow in projects. And they didn't even have, standard terms for the stages of a project that they go through. And so I think more and more, contractors, for example, who are part of NECA, are now very interested in starting to master the process side of things. And to do that, they really have to start rolling up their sleeves and doing some hard work to understand, okay, what are all the things that we do to get this thing done? And what are all of the different value streams that have to be integrated? And once they start seeing that, I think that's a very healthy process, because once they see that, then they can start to attach value and cost to what they're doing.
Right. And, frankly, identifying where those pinch points or pain points are for the customer, right? That's where we as distributors can add real value and bring real value, is helping the customer identify that.
So you talked about the importance of having services revenue in terms of probably customer stickiness, the ability to gain share of wallet and just capture more of the value in the marketplace. What's your goal in terms of percent of revenue that should come from services?
Boy, that's a great question, and I think some of our businesses are more prone to having services be a part of that than others. So, but I would say in our pure play electrical business and our plumbing and HVAC business, I could see that being 10-20% in the future, as we continue to, drive the business forward. And that's a big number, right?
And it also, I think, helps support a lot of your other business goals around customer acquisition, around share of wallet, net profitability. Have you been able to measure the net profitability of your services?
We have not mastered that yet.
Okay.
Maybe that's something you can help us with.
I'm sure we could have a look at it. You talked a little bit about digitization and meeting the customer where they are. A lot of distributors, I think, have been disappointed in their e-commerce journey. They build it and hope that the contractors or other customers will come. And over again, they end up languishing in the single digits with their e-commerce experience. What are your thoughts about that? Is that something that you can overcome, or what are the keys to happiness there? Yeah,
so a couple of things in that in that vein around e-commerce. There's measuring revenue as a percentage of e-commerce revenue as a percentage of total sales is one metric, right? And it's a metric that a lot of people get hung up on. It's an important metric and one that we want to continue to drive forward. But I think also self-service events and what activities that are low value from a customer's perspective, or activities that they want to be able to self-serve. Are we providing them the opportunity to be able to self-serve those activities where we've got we don't have an inside salesperson taking a call from a customer about do you have this in stock or what's my price? They can self-serve some of that. And we can allow our team to focus on more higher value activities. So I think revenue as a percentage of sales is one metric. I think providing you need to provide an outstanding experience, and the benchmarks have really been set by the retail, what's going on in the retail space. So that's the expectation. That level of
frictionlessness,
personalized experience, knowing your customer, presenting information that is relevant to your customer, easy searchability, and other functionality, right? So if you have an app that somebody can take a picture of a motor in a furnace and get a parts breakdown, and those are the types of things that I think really add value. And provide that stickiness that you talked about. So we become the resource. Our e-commerce site becomes the resource for our customers to help them run their business. So I think all of those things combined will allow us to drive revenue as a percentage of sales up as we provide a more meaningful experience.
Well, one of the things that SPARXiQ acquired a contractor marketplace late in 2022. And what contractors tell us over and over and over again is that they're frustrated by having to navigate 5 or 10 different distributor websites. And not only is the quality of those e-commerce experiences extremely variable, but just as a matter of principle, they don't want to go learn 5 or 10 different navigation pathways. And so contractor marketplaces have started to become a much bigger trend, because what enables the contractor to do is to source across their various trading partners with a single navigation pathway. Can you talk a little bit about your thoughts on EDI and these types of marketplace platforms that can help to boost digital revenues without necessarily attaching unrealistic expectations to e-commerce?
Sure. So I think that is another another channel of electronic commerce, right? It's not our site. It's a EDI relationship, and we have some of those relationships today with some third-party providers at our contractors. There is a movement forward, and there are a lot of those software providers out there that are providing this service that you just described. So we know we need to participate in that, but we also want to figure out, hey, how do we also add enough value on our e-commerce site? Because that that marketplace is a little bit of a leveling, right? We can't.
You don't own it.
Yeah, we don't own it, and we can't showcase our digital investments because we're utilizing somebody else's platform, and which normalizes us with our competitors in a local market. So figuring out a way, it's an important channel for many of our customers, particularly large mechanical contractors and electrical contractors that I've seen utilizing that space, progressive distributors. And it's not always price, right? They're not always availability is another key thing that they're looking at. And where can I get that order completed at the in the most efficient way? Hey, price is always going to be there, but who has the inventory and who can make it happen?
Yeah, it's interesting that you bring up the question of price versus availability. So on our platform, of course, we get to see what is the required time frame for material purchases, and somewhere around half of material that gets bought actually is needed in less than 48 hours. And fundamentally, it's not being put out for bids and quotes. It really comes down to 4 criteria. The first criteria that contractors tell us is in-stock availability. Number 2 is geolocation. Is it close to the point of need? Number 3 is supplier reliability. And number 4 is price. And most buyers that we talk to in our business will tell us that, unless there's more than 10% price difference, they're going to always go with the folks who have beat their competitors on those other 3 attributes. It's one of those urban legends, I think, in distribution, that people are so price sensitive about things. And I think if I try to explain, why do distributors think that people are so price sensitive when the data show that they're not, it's because of the tactics that buyers use. They simply throw out lines like, you're going to have to do better than that, or you're coming in a lot higher than you need to. But they don't have good data most of the time. Their data is pretty poor. And they don't like having to do the stare and compare of looking at different RFQ responses. So all that work, it's just fascinating how many distributors don't really understand the true price sensitivity of their customers. I don't know if you had thoughts on that. I mean,
yeah, you're right. And price is, where a lot of people go initially, right? And a lot of times, even our sales team, we'll hear, hey, I lost that job because of price. Well, that was the easy answer your customer gave you. There were 3 or 4 other reasons why it wasn't your turn. You didn't have the inventory. You couldn't satisfy their delivery requirements, whatever it was. So you're right. It's typically an easy answer it's an easy crutch to fall back on. But the other things, with labor costs of our contractor customers being what they are, having the material there when they need it is paramount.
That's right. And the labor cost is what's driving the lesser price sensitivity, because the real cost structure of contracting is mostly around labor. And what was interesting to me was, so we go to the NECA conferences every year, the national conference. Yep. What's fascinating is you could look at all these different sessions. There'll probably be, 25 different sessions that are going on there. Not a single one is, how do I get lower prices from my distributors? It's all about, the workflow and how do you coordinate material? How do you do better, prefab work, more and better prefab work? And all of the energy in that industry is really being invested in this larger value stream, like you were talking about, and where services are so important. And yet so many distributors just keep limping along, hacking their prices, overriding things. One of the topics I wanted to dig into was this whole, I think it's a nice segue, we've worked with DSG now on an important pricing and profitability journey. I was struck, I think I told you preparing for this call, that we haven't had a company complete that work as well and as quickly in probably the last 10 years. Can you talk a little bit about how did you pull that off, and what were some of the hidden factors that made it successful?
Sure. So maybe I'll start with the why, and establishing the why on why this work was important, as we are driving our digital transformation. We had to find a way to pay for it. So this is a way to pay for it. One, so that was one of our why. The other, coming out of the pandemic, right, where I think and supply chain challenges, we all in the distribution space, I think, enjoyed healthier margins than we had previously. So, thinking about that and saying, hey, how do we help think about this differently and not just go back to where we were and what's normal in 2019. So, how do we protect some of that, as we had already started to see, some slippage there. So I think starting with the why and why it was so important was really critical. I have an outstanding leadership team at DSG, and we had great alignment on why we were going to do this work, how we were going to do this work, and how quickly we were going to do it. And I think starting with that alignment, and then dedicating the appropriate resources to it, having a good understanding from your team on what resources we need to dedicate to it, and then dedicating those resources and saying, hey, this is the priority for the next 90 days. And we put a line in the sand on, here's the day we're going to implement.
I think that's one thing a lot of distributors don't do that well at. You know, if I look at different clients that we work with, some of them struggle because, frankly, the management team is not convinced of the strategic impact of the project. Like, they have a notion that they'll make more money, but they don't really commit to what will the outcome be for our company, and therefore, what choices will we make? How will we prioritize? How will we push unimportant things off the table in order to ensure that we achieve that outcome? A lot of them sort of hedge on what that outcome will be, and then that hedging shows up in, you know, a lack of prioritization. There's obviously tension between sales and finance that has to be overcome. I mean, there's a lot of internal work that I think it sounds like you guys have a pretty cohesive management team where you're aligned on the purpose of the team. Can you talk a little bit about that?
Yeah. So, you know, the purpose of why we were doing it, again, to not let the slippage happen, to protect our profitability, and to fund other important projects that we had in the business. So, you know, those were the key metrics. The other thing I will tell you is, we didn't let progress get in the way of perfection. And John Wisnowski, our VP of Ops, always used the term, hey, 90% is still an A. So how do we get 90% of the way there, which is really good and a hell of a lot better than we are today, and be comfortable with that, and not spend all of the time between 90% and 100%, because that's where all the hard work is, right? And then you're foregoing all of the progress that you could be capturing while you're trying to work on that last 10%.
Yeah, the diminishing returns issue definitely pops up there.
Yep.
And, you know, one of the things that I always think of, I try to articulate, why should a company prioritize this? It's because everybody's working more or less the same amount of time. Everybody's going to work 2,000 hours or 2,500 hours, however you frame it, in a year. And yet some distributors, controlling for customer and product mix, are pulling down 800 basis points of EBIT as a percent of revenue instead of 400. And really, it's not that necessarily that their customers are any happier or less happy. It's that the sales teams just don't have the discipline or the tools to be able to get paid properly.
Right. And it's, and I think that the term you just used, the tools, is really, because I really view this as, you know, additional tools in our sales team's toolbox. Because from a pricing perspective, you know, without this work, they were kind of blind, right? Everything was a cost plus mentality, a margin mentality, versus what's the market? What can the market bear? And then how do we attach value beyond that? And, you know, your team kind of brought the science to that. And we really viewed this, you know, this project as, and we called it our strategic pricing initiative. It was part art and part science. The science piece is the systematic work, you know, that happened, kind of the magic behind the scenes. And then the negotiation training, which before we did the negotiation training and before we even implemented the science, right, the magic behind, we were already starting to see an impact.
It's so funny because you just think about all the time that gets spent on product training, or the time that gets spent on, you know, ERP training or CRM training. One of the most basic skills of a sales rep is they got to get paid for the value they bring to the customer. And over again, we see 90% of buyers have been trained in negotiation, and they're just picking the pockets of their sellers on a daily basis. Even, as I said, when they're not very price sensitive, they just learn these tactics that cause the seller to flinch over and over again. You talk about the change in mindset of the sellers as they went through the negotiation training.
Yeah, so I think they gained confidence. Just understanding what you just described. Hey, your customers are going through this training, so you know, here's the counter. Yeah, here's the counter to that. And I just think they gained a lot of confidence. If nothing else, through that, you know, through the training process, the negotiation training process.
One thing that they learn in the negotiation course is what we call the golden rule, which is to say, if there are pressures on me, what are the pressures on the other side? And we talked a little bit about that a few minutes ago, and we said, okay, there's a lot of labor cost here. And if the guys aren't getting the material they need on the job site, then work stops and labor cost is, you know, wasted. And so, just understanding the time sensitivity and the struggle that a lot of contractors have planning their work and getting the materials to the right place at the right time, that changes how you think about your pricing. If you think that they're just sitting there with quotes on their desk from other people all the time, and that they're comparing every single thing that you send across their desk, you're just going to act very differently in negotiation. I think that's probably one of the ahas that sellers have is, okay, there are pressures on both sides here.
Absolutely. And understanding where those pressures are from a customer's perspective arms our sales team with a piece of information that makes pricing secondary.
And I think it ties in nicely to what you're trying to accomplish with your services work, because a good negotiator is asking more questions and they're understanding the customer's challenges better for a couple of reasons. One is obviously to not give in on price when price isn't the issue, but also to be able to spot opportunities for win-win proposals. And I think here that's where good discovery work can lead to new proposals for service work that creates a much healthier relationship.
Absolutely. Agreed.
So one of the things that you've seen is that you've worked in different companies, ownership types. So you've worked in public companies, family-owned businesses, and now in ESOP. Can you talk a little bit about the differences that you see? What are the advantages or disadvantages, and what does that mean for DSG today?
Sure. So I'll maybe start at the beginning. As a small family distributor that I worked for many years ago, and I didn't know what this meant at the time, but they were undercapitalized, and being undercapitalized makes it difficult to grow the business. So that was many years ago, and then I went to work in public companies. Actually 3 public companies, and I never changed jobs. As Westburn Supply was acquired by Rexel, and then they spun the plumbing business off to Wolseley. So I had the same job through all of those transitions. And it was, I think a couple of things as I think about, public companies. Obviously, they have scale, and they're able to leverage that scale and drive efficiency. Particularly with the Ferguson Wolseley team, I mean a big drive on people development and leadership development, which I think was interesting. On the flip side of that, I think there's this being a public company, this pressure to deliver quarterly earnings or a yearly, a push to the year-end number. And sometimes you make short-term decisions to deliver that could have long-term implications.
Well, one thing that strikes me, if I compare the family-owned business to the public company, is that family-owned companies can very easily become lifestyle-driven businesses where they're content with the cash flow and the profitability. It doesn't have to be industry leading as long as it's family satisfying. And that leads to complacency around being best in class, and not always, but it depends on the nature of the family ownership. But on the other side of it, I think with the public companies, you see what I call diseconomies of scale, which is they get worse at things as they get bigger and they become, less cost conscious. They become, let's just say, sloppier around how they manage investment. They can often become more inert. They're very slow to make decisions as they get bigger. They have bigger committees that make decisions about things, and harder time getting people to come together and actually act on things. How does that idea align with where DSG is as an ESOP? How would you compare?
ESOP maybe we are the anti everything you just described. Some of the as I think about, to continue to grow the ESOP, we need to grow the business. So having a growth mindset is really important, for us to continue to drive the company forward. We can't be a lifestyle company because, we can't support continue to support the ESOP and grow the ESOP and provide the appropriate returns to our shareholders, which are all our employees, right? And they have a vested interest in continuing to drive the business forward. So I think, and particularly with DSG at our size, we can remain scrappy, we can remain nimble, and be able to make decisions, very quickly, and and have a longer term view on growth, knowing that we're going to continue to grow, and that's going to grow the ESOP. We have a long-term view of what our growth opportunities are, and are going to continue to invest in. And we are making long-term investments that may, impinge this year's results, but we know and are committed that these are going to pay dividends in the long term. So having a longer-term view and being nimble and able to make decisions and not allow our corporate bureaucracy, which we don't have a lot of, but it continues to grow as we grow, that we don't allow that bureaucracy to slow down our ability to act.
Mm. And what's your take on the relative importance of organic versus inorganic growth in the future of DSG?
So I'm just thinking about the last couple of years where our business has doubled, and about the majority of that has been organic, with some inorganic layered on top. So we think we have plenty of opportunity to continue to grow organically in our footprint, and we'll continue to add acquisition inorganic opportunities into the fold where it makes sense, and where that is an easier solution or a more efficient solution to us growing in a particular market in a particular segment, as we grow forward. But as we think about that, we have not done an acquisition in 2023. We did 5 over the last 3 years. So we're going to continue to be opportunistic when those right opportunities present themselves from an acquisition inorganic perspective, and we'll continue to aggressively grow organically, either through our current footprint or opening greenfield locations.
And you talked a little bit about your footprint. One of the things that makes DSG unusual is that you're serving 3 different verticals within the company. So you've got your electrical, your HVAC, and your waterworks. Can you talk a little bit about the unique opportunities that creates and some of the challenges as well?
Yeah, sure. So if you think about our geography, so 8 states in the upper Midwest, largely rural, more cows than people in some of the states we serve. If you think of some of these secondary and tertiary markets, our ability to offer a plumbing, heating, electrical solution to a town, where in that town you may have 3 different tradesmen who are, and if we were only in one discipline, it'd be very difficult to dedicate the local resources in bricks and mortar and people to serve just one of those disciplines.
So that's like a subscale issue where you don't have the scale in certain geographies to be able to either be profitable or, let's just say, efficient.
So when you have 3 trades that you can serve, all of a sudden your market opportunities expand pretty exponentially.
And how does that play out when you get out of the rural markets, the secondary markets, into the cities? Do you still have that? Do you see the synergy there that takes you beyond this issue of scale?
So there is some synergy still on job site truckloads on job sites where particularly in large cities where that's an issue, and you only have a contractor only has so many slots to get a truck in on a job site, where we can deliver 3 trades on one truck. So that's helpful, but it requires a different level of focus, where you have to bring much more focused energy and effort to each individual segment in the larger markets.
Do you have sales specialists who can help to navigate that issue?
We do. Yep.
So I was thinking, one of the payoffs from being in all 3 verticals is that you can really go after and manage more aggressively for big projects. because your payoff from tracking those projects is richer than that of a single vertical distributor. Can you talk a little bit about project management and how you guys leverage your footprint, if you will, to master that?
Yeah, we don't do everything everywhere yet. So we're not in every segment in every location across our entire footprint. But South Dakota is probably a great example of where we are, fully integrated in all of us. So HVAC, plumbing, electrical, waterworks in the entire state of South Dakota. So there we can, where we're delivering out of one location, we can coordinate between trades, between our customers on helping project management, and even start getting involved with the general contractor on helping them manage the entire job site, more efficiently.
That seems like a unique value prop for a lot of GCs.
Yeah,
you actually help to pull those workflows together. Well, I know we're almost up on time. I had one last question to ask you, which was, is there a particular pivot that you've made over the last 5 to 10 years that you wish you had made sooner? An understanding or something that gee, I wish I had known that earlier and done that earlier. That you could.
Yeah, and I will tell you, it's a great question and not one you prepped me for. So, but I've got an answer. And we're going down this path right now, and it's really relevant and recent. It's our digital transformation work, and for the last couple of years, and my leadership team has heard me talk about this, and I've been frustrated by our lack of progress in the digital space, and it was really on me. I needed some clarity, and the clarity was that, hey, this isn't this digital strategy is a business strategy enabled by technology, and I was looking at the technologists to deliver me a digital strategy. So that was the revelation that I had, was that, hey, this is really a business strategy that is enabled by technology, and the business folks need to define and bring clarity to what that means.
And that was, I'm sure, a big change, because it inverted the roles of everybody who was working on that. All of a sudden becomes critical for the executives to define what it looks like rather than the technologist.
Yep, absolutely.
Well, I want to thank you. This has been a great discussion, and we wish DSG the best. Look forward to our continuing work with you guys, and just want to thank you again.
Thank you so much, David. Great to spend some time with you.
Take care. Bye-bye.
I know.